Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, June 8th, 2010. Let's start today's broadcast by taking a look at the euro-dollar pair, which stuck within a relatively tight range of around 100 pips. We rallied in the Asian session as we had a speech from Bernanke in which he said that the U.S. economy will not fall into a double-dip recession and the recovery will proceed at a moderate pace. But then that little bout of risk aversion was sold off in the European session as we had news from Fitch that the UK would have to increase the pace of its consolidation of its fiscal budget deficits. However, in the New York session we had another swings back and forth. First news that the Swiss franc intervened in the Euro-Swiss franc pair, and then in a late rally in New York stocks, which helped risk appetite. Actually, the swings here didn't we could see it a little bit more clearly in some of our other currency pairs, but just to show you first the euro dollar. Investors continue to be worried about the Eurozone sovereign debt, and but today we did see pretty much some consolidation throughout the session. If we take a look at the dollar-yen pair, we see the moves in risk sentiment a little bit more clearly, as first we had this rally on the Bernanke statements in which he offered some optimism about the U.S. recovery, but warned that there were still significant headwinds created by high unemployment and tough credit conditions. He also said that the Fed may raise interest rates again before the economy is back to full employment. In the European session, we had European stocks sliding, and so that caused traders to move into the safe haven of the Japanese yen, but then a late rally in New York trading with actually the Dow Jones closing with a triple-digit gain helped the dollar to pair some of its earlier losses. This bout of risk appetite also helped some of our other currencies, especially some of our commodity currencies, as we had gold and some other commodities piggybacking on the rise in gold. First, let's take a look at the pound dollar, where we saw a rather sharp slide from the 1.4527 level down to 1.4344, though really we had this 2-hour session where we slid sharply following the warning from Fitch Ratings that the UK would have to accelerate its pace of fiscal consolidation, its pace of cutting its budget deficit, and that put the pound under some pressure during most of the European session. However, similar to what we had seen in the dollar-yen, the little bit of risk appetite towards the end of New York trading gave us a bounce back following our test of our lows. Now, I did mention the Euro-Swiss franc pair, and we see that in today's trading we fell below our lows yesterday around 1.3850 until we hit the 1.3750 level, and we see this spike in favor of the euro against the Swiss franc. If I actually move this to a 1-minute chart and I zoom us back to around 11:12 p.m., we could see this very sharp 1-minute candle, which if I measure from high to low is 150 pips. So a very clear sign that the Swiss National Bank intervened in the markets after we tested the 1.3750 level. However, following that spike, currency markets did pare down those initial gains, though we didn't move below that 1.3750 level prior to the end of trading. So now back at the hourly chart, we see that we are similar to our other pairs. We have a little move in favor of risk appetite and in favor of the euro here against the Swiss franc. Now, I did mention our commodity currencies, and here we're looking at the Australian dollar, US dollar, and following several sessions of declines, we see the pair rallying in today's trading. Again, most of the rally coming first in the Asian session and then in the late New York trading session. So by 5 p.m. Eastern, we had come close to testing the 0.8275 level. Another one of our commodity currencies, the Canadian dollar, the US dollar Canadian dollar pair, we see moved in favor of the Canadian dollar for a second straight day, with again a lot of the gains coming in the late New York session as we broke below this support around 1.0515 that had held during most of the New York session. Here, in addition to the risk appetite, we could see traders and investors trying to move towards countries which have relatively strong balance sheets, in that they have trade surpluses and credit account surpluses, and since they export a lot of resources, both the Canadian economy and the Australian economy fit into that category. Now, of course, if we have a move back to perhaps a double-dip recession in the global economy, those countries' economies will suffer as well as their currencies, but right now they were riding today's late risk appetite on the back of higher equities. Now, we didn't have too much in the way of fundamentals today, so markets were honed in on what was going on in equity markets, especially in the U.S. We'll see how the Asian session begins and how we translate the late bout of risk appetite to tomorrow's trading session. So we'll see whether this is just a correction to the risk aversion we had seen to end last week, though some of the factors there, like the Hungary situation, may have been slightly overblown. And we are seeing stocks rallying somewhat, though they did fall rather sharply the last several sessions or so, so they had some space to move up. I would say on the whole today was a day of further consolidation in currency markets, as there wasn't too much new news to swing currencies one way or the other, though except in the case of the UK pound, where we had the Fitch Ratings news, and as well as the Swiss franc, which hit a new record low against the euro. Though the late rally in US equities did help the commodity currency block somewhat. Let's see if the fundamentals coming out overnight will have some impact on the markets. Tonight at 7, UK posts measure of consumer confidence as well as inflation. That is followed by Japan's core machinery orders, and Australia with its measure of consumer sentiment as well as home loans. Overnight, Japan posts a measure of preliminary machine tool orders, and UK posts its trade balance. So some event risk for the UK, Australia, and Japan for the overnight session. While tomorrow we have the Fed Chairman Bernanke testifying in front of Congress, and we might hear him say very similar things to what he had said in Asia last night. Following that up, we have a measure of U.S. wholesale inventories as well as the Fed Beige Book, which is followed at 5 p.m. by the Reserve Bank of New Zealand's interest rate decision, in which they are expected to raise rates by a quarter point. So that will introduce event risk heading forward. We'll see if that it will be priced in by the New Zealand rising prior to the release, or will traders wait until the actual 5 p.m. So that will do it for today's broadcast. For a technical look at some of these pairs, head over to fxtimes.com, where you can see a technical analysis video recap as well as other news and posts. Until tomorrow's daily video recap, I'm wishing you good trading.